Investors and traders alike have been focused on the dollar moving up very strongly this year for a few reasons. First of all, the disparity in interest rates between the US and other economies out there in the world, and also a flight to safety bid that's coming in the dollar, and a lot of denominated foreign debt that's in dollars that is causing a big demand for dollars and a dollar shortage. All of that has been helping the dollar move to the upside, and we've been in an inverse correlation with the stock market, and that's mostly about the fact that the international companies suffer from the higher dollar because our goods here are more expensive, the goods over there are much cheaper, so that lowers demand for U.S. goods. It hurts earnings, and add to that the increases in interest rates during that time. That hurts earnings. So all of that puts demand out there for the dollar, and is a reason for the weakness that we see in the stock market, or part of the reason for sure. Let's take a look here. We're going to look at monthly, weekly, and daily charts. Now, historically, the dollar and the stock market can move together for long periods of time, positively correlated. Often we see them both moving up together as the economy is going through a favorable period and people want to be invested in dollar-denominated equities. So that gives you some strength in the dollar, but now it's very different for these reasons that I've mentioned. I want to start out by looking at a very, very good monthly chart, and I'll look at monthly, weekly, and daily, and you're going to get an idea why I believe that the declining dollar, which we've seen right now, will continue in through December, and that will be supportive to a stock market rebound in through a similar period in towards the end of the year. So this is a really fantastic chart, the monthly cyclical chart on the dollar, the DXY. And this goes back all the way back about 15 years. And you can see the harmonics that are on the bottom. These follow the principle of nominality very closely, 20, 40, and 80 months. That's just coincidental. Most things don't follow that closely to that principle. And you can see in here how there's a big dominant cycle, and you can see the half cycle, is it in there, and the quarter cycles. They really line up incredibly well. And when you get into this period where all three of them are pushing to the upside, you get these big upward spikes. You can see that right there and right over here. Then you get into a corrective period, and that's where we are right over here. Now, if you look at this first quarter cycle right over here in this harmonic family, you could see that pullback on there, but then it moved up to a high. This first one had a sharp pullback right there, and then it moved up and tested the high, and then began to move down again. So right now, what we're looking at in here on this monthly pattern, and I'll give you a little closer look in here, is the probability that there is going to be a correction right over here, and this times out right in towards the end of the year. The supports come in here around 109.5 and down over here around 105. So the daily chart, weekly chart have supports kind of in the middle there, but this says that it's pretty likely that through the end of October here and then November and December, the dollar is going to be under pressure, and then after that's over with and that correction is over with, it moves up again. The question is, will it stop in this same area up around 114, 115, or will it get up to that next level up there, that very key Fibonacci extension at around 119? So that's the question. I would guess it'll come down here, test the highs 114, 115, and then get into that bigger corrective period out in towards the middle of next year. These yellow ovals are where the periods of correction are, the highest periods of risk, and you could see the decline in here and what we're projecting into mid-year out over there. But right now the focus is right here in these next couple of months, and it looks like the dollar will be moving to the downside. Now let's switch over here to the weekly chart, and if the dollar is going to be moving to the downside through the end of the year, then the weekly pattern should line up with that. And this points to right down towards around the middle of December. So you can see the top as it began began to form in here. And note this reversal scout. This is the weekly momentum condition indicator that we use on here, and it's just flattening out right over here. I'm expecting this will be turning down in here. Now the support's right over there on the monthly that I showed you is around 108 and something, and here you can see the support right here around 107 something in there. So right now it's 110.5 on dollar, and I would guess that it will be coming down into this area, down into the December time frame to somewhere between 108 107 right in there. These are the minor supports. As you could see, it hit that right over there, and then the monthly support and the weekly support comes right in over here around that 108 number. 108 is a very reasonable target for it to come down here into these next couple of months. Now again, remember, we're talking about a small decline in here based on the size of the rally it had, and then another move in here and get up and test at least that 114 area. That means that the risks for the stock market are likely to pick up a lot out over here because of this inverse correlation. Right now, there'll be some relief, and there's some sense that the language out of the Fed is changing a little bit as they're starting to soften their language in their speeches, and some messaging going on that, you know, maybe interest rates will not be going up as quickly, and maybe they'll get to a level where they pause after December or the first meeting next year, and then probably hold in that area for a long time. But then out of here is when the time where it's going to be obvious that inflation's not giving it up that quickly, and maybe the dollar gets a lot stronger and the stock market goes into another downside break. So that's important to look at also. Let's just look at the daily chart, the short term. This is just phenomenal cyclicality when you look at this. The first thing I want you to look at as we discuss this is that there are harmonics in here that are very clear in these harmonic families. Each time you get a corrective period where both of them are moving to the downside, that's the energetics or money flow pushing down, you get into corrections like you see here and here and right over here. Each of the next rallies you see moved up to a new high here and here. You can see that. This one failed, and that means that this energy is gone that was rallying and moving it up. And then what that says is it moves down through this 110.09 area, that is a breakdown, and that gives you the head and shoulders top that's formed in there. So the head and shoulders top measurement comes in down over here around 107.5. Remember, we talked about 107 108 area, and then this cycle in here makes a bottom in the mid-November area. So you get this bounce is very likely to fail and move down again. That means that this period in here is favorable for stocks based on the inverse correlation. Then this gets some kind of a rebound. Stocks probably pull back, and this is the big period of risk. And this is a period right over here where the dollar could fall pretty sharply down to that 107 area, and that's probably going to give stocks a lift late November and into December. That's what we've been looking for, and you can see how this inverse correlation is holding up with all of our other analysis on the stock market. So really wanted to show you this, how we look at the monthly, weekly, and daily cyclical patterns. We understand comparing them what the energetics are, and then we can see what the momentum conditions are. Here, you can see while the slim ribbon was positive, you see that green arrow right there or green arrow right there, and it moves up, it tells you the momentum is strong. The slim ribbon PO, this is a level 4 proprietary study, tells you when momentum conditions are resuming to the upside. You can see that right here and right here and right here, but this time it failed. It went neutral, and look, it turned red right over here. So now we have negative momentum conditions in the dollar on the short term, and that says that this rallies that you have in here, like you're getting an update, you have an update on Thursday of this week, then that is likely to give you following declines after that. You can see in here that our targets in here based on the mid-December sync with the weekly are about 107.40. If there's a downside panic, it could get down to 106.35. That's that 61.8% right over there. So a lot of downward waves in here, as you can see, likely that all lines up with the weekly and with the monthly, and that essentially says that the period between now and sometime in December, we will see the dollar weak, and we will see the inverse, because right now we're getting inverse trading to the stock market. We will see the stock market firm or rise during those periods, and that is a good reason to believe that what our analysis has been on the stock market, which has been a favorable period for the fourth quarter, all within the context of a bear market, that this analysis is supportive of that. If you look a little further out after that December period, the dollar is likely to have another period where it surges to the upside, and that's pretty certain it's going to help the stock market again move to the downside. That is the big picture analysis on the US dollar. I hope you found it incredibly interesting. And I want you to sign up right now if you've never been a member. This is the final week for our level 2 trial, special 50% discount. You're going to get everything on this page for just $29.50, and it's non-recurring. We're going to give you a month to look at it, and that includes, if you want to go through more than 600 videos in our video library. It's incredible in 10 categories. I know you will never get through that in a month, but the evergreen videos in there, which are more than 300 in that video library on tools for techs or trader psychology or style, strategy, and plan, things that traders and investors really need. You'll spend forever on there watching that. So stock index report live stream. This is a live look at the S&P 500, NASDAQ, and Russell with 15-minute charts and the important resistance levels, support levels, and acceleration zones, so you can catch those bigger trades. Fantastic. You'll get the daily stock index report, enhanced snapshot on all of the indexes, and be able to see all of our analysis. You'll get our live chart streams on the S&P 500 with multiple time frame analysis and those proprietary studies I just talked about. You'll get the stock market weekly ETF review, our simulator momentum tracker with over 1,000 symbols on there, and that's for investors and position traders with our built-in algos. Future Speak show on Wednesday, 24 different futures and indexes, weekly and daily charts. Arvi does a brilliant job on that. You'll get a complete video library, our workbench with all the trade planning support that we give, and Discord access to see what our analysts are talking about live. Just unbelievable. It's too much to show you all here. I want you to go make sure you take a peek at all of the videos that we offer in that library. You'll get a good idea and everything that we have here. Go to the top of the askSlim page. Click that Learn More button, and it will give you great illustrations of everything that we're talking about here for $29.50 non-recurring. This is not going to recur. That's what it means. You're going to have to decide whether you want to stay after that or it's just going to expire. You don't have to do anything. Sign up right now for $29.50. Any questions, write to Matt at askSlim.com. Just fantastic information for you.